Hey traders, it's Theo here. Welcome to our weekly market breakdown. In this video, I'll walk you through the key setups I'm watching, major levels and trends, and what the fundamentals are telling us for the week ahead. If you want to stay sharp and trade with confidence, definitely this is for you. Let's dive in.
First is a chart of gold, and this is the 4-hour time frame. The price last week made a higher high, kept forming also the higher lows, clearly in an uptrend. As the market is rising, we expect the price to keep rising after it creates some retracements. These retracements usually are seen in a form of how I call them soft downtrends. The first soft downtrend can start from here and it can stop within this fair value area before it bounced off and move upwards, or if the price breaks below this, area, the next support zone will be this swing low. There is an upward trend line we draw connecting all these swing lows. There is also another trend line we can connect using these swing lows here. So this becomes an area of interest. Now, for our time frame, trade this. We drop to lower time frames like 15-minute and 5-minute charts, or any other time frame you prefer. This market overall has bullish implications. For the uptrend to continue, we need to see a break above this 4-hour high. For as long as this swing low remains unpenetrated, the market has bullish implications. In case the price breaks below this swing low, the next area of support is this one here. Euro US dollar, 4-hour time frame. The price really consolidates and is within these boundaries, this resistance and this support. The price last week tried to break above this resistance to move further upward, but a long leg doji candle formed and it acted as reversal. Currently the price formed a lower low, confirming a swing high at the top. If we consider that the price formed a higher high, and we can see this as the beginning of the new uptrend, the market could retrace somewhere around this inside support. Also, that inside support coincides with the 61.8 Fibonacci retracement. The cluster of this inside support and this Fibonacci 61.8% retracement can add more weight into any reversal price action print in this area. On the other hand, if the price keeps moving downwards, the first support area will be this one here. A break below this support can potentially lead to this one there, but most of the times the market will go to meet the last area of buyer's control, which is this support down here. If the price closes above this resistance, the next area of resistance will be this one here. You understand that this is the 4-hour chart, and if you drop time frames to do day trading, for example, you will see the distances being wider. Great British Pound US dollar, similar case, but the sterling failed to make a higher high. Last Friday, the price filled up this fair value area with this Marabozu candle. The non-farm payrolls pushed the price up to this resistance, but it didn't sustain above. We didn't see any candlestick closing above the resistance. It formed a long leg doji candle and now a confirmed swing high, which means the price can enter a soft downtrend with the inside support being right here. If the price creates a reversal price action formation, something like a bullish engulfing or a bullish hammer, the market can bounce off and move upwards. On the other hand, if the price continues all the way down, it will meet the support right here. In case the price breaks and closes below this support, the next support can be found right there. On the lower time frames, it will be enough room to trade from this level to that level, capitalizing on the trends. So the relevant levels for the Great British Pound US dollar, this recent resistance, this new resistance in case of a push to the upside, and these two support levels. These are the key zones. The Australian dollar US dollar, it has more clear view. The price last Friday formed a higher high, clearly clean up all these swing highs. It didn't move away, and that raised some concerns about the bullishness of this market, although the market has bullish implications because the price formed higher highs and higher lows. If the price now goes deeper into a retracement phase in this soft downtrend, there is a high chance for a potential bounce around the support levels. But if the price moves all the way down, the ultimate support, what I call the buyer's area, is this support down here around 0.65 actually. If the candlesticks close below this support, the next area of support becomes here and the one after down there. On the other hand, if the price continues moving upwards, we're going to see a nice move to the upside, and potentially the price will clean up this swing high and moves further to this area up there. Connecting these two swing lows, we can draw an upward trend line, and we see last Friday the price bounced off and moved upward from that trend line. That means this upward trend line becomes a strong area of support for potential bounces. This is the USD JPY. Currently the price is here. There is a fair value gap created last Friday during the non-farm payroll report due to the weakness of the US dollar. If the price continue moving downwards, the first support becomes this one here. If the price close below the support and moves further down, there are other two supports here to use them as potential areas. The key levels of resistance are first this one here, 148.8 and 149.2. Keep in mind that if the price moves to the upside, perhaps this fair value area after field, it can cause the market to retrace and move downwards. So we don't know what's going to happen within this area, so keep an eye on that and stay alert in case you are in some trade, some kind of trades. But if you are using the 4-hour levels to trade on the 5 or 15-minute chart, you need to keep in mind that pretty much all the highs of the 4-hour candles can become strong supports, especially on the 5-minute chart. The overall picture for this trend is currently under consolidation. A solid break above these highs or below this low will show the direction of the market. The only clean price action on the weekly chart for this week found on the US oil. The market formed a bearish engulfing reversal, and it still has room until the next support. That's the weekly chart. Dropping to the 4-hour time frame, the price formed all these lower lows and lower highs, clearly in a downtrend. This is the soft uptrend of the daily chart. On the daily chart, the market created a retracement trend, which we call it a soft uptrend. We drew a trend line underneath the swing lows, created meaningful market structure for this uptrend. A penetration of this soft uptrend was enough to put the trend back into the downside. The price left behind these two fair value areas. We do expect some kind of retracement before a further continuation. This is what we expect, but this is not how the market operates. Anything can happen. The price can just continue downwards with even a couple of candles. That's normal situation. But under normal market conditions, the price will retrace and then it's going to keep going downwards. Nasdaq, it's an interesting market. It's been few weeks. The price started around this all-time high with this candle with a long lower tail, followed by an inside candle, followed by a bullish engulfing last week. Weak bullish engulfing, but still has bullish implications. On the 4-hour time frame, the price within this minor consolidation formed a higher high. What is important to observe is the bearish engulfing reversal printed during the New York trading session. From Monday onwards, if we see a lot of inside candlesticks here, it's a sign of market weakness, and possibly they will follow through a downwards breakout. And in this case, the next areas of support, the key levels of support on the 4-hour chart are these three here. On the other hand, if something changes and the price breaks above this high, the price most likely will keep on going further to test the all-time high. Before we check the news events for this week, first let's see what happened last week during the non-farm payroll in the US. The market expected an unchanged number from 79K to 75K. It's an unnoticeable deviation, and usually the market doesn't fluctuate a lot. The price on the US dollar doesn't really affect it. But the 22K report, 3 times lower than the forecast, definitely had a negative impact on the US dollar. And this is the reason the prices rally against the US dollar during the non-farm payroll last Friday. On Monday and on Tuesday, there won't be any significant news events. On Wednesday, during the New York trading session in the US, we will have the report of the core PPI and the PPI as well. The forecast shows in both cases a drop in the number. This can have negative impact for the US dollar. If the actual report confirms the forecast, and at the same time the market follows through, we expect a weak US dollar. So the price of the gold might rally, Bitcoin might go higher, Euro US dollar, Sterling US dollar, the Great British Pound, or the Aussie against the US dollar can all push to the upside. On Thursday, the European Central Bank will report the new interest rates, and surprisingly they are keen to keep the interest rates unchanged at 2.15%. Usually, the currency weakens if the interest rates remain unchanged or if they drop. If the central bank cut rates, the euro most likely will go much further down. We have to wait for the outcome before we commit to which direction the euro will go. During the New York trading session, all eyes will be on the CPI yearly event. And in the US, they have the expectation of plus 0.2% increase. This can definitely positively impact the US dollar, but prior to that, we have to see what's going to happen with the euro, and the day before what's going to happen with the PPI event. Because if the euro gets strengthened and breaks outside the 4-hour consolidation, a positive CPI can cause a retracement on the euro US dollar. On the other hand, if the US dollar won't follow through any positive event here, and prior to this event the euro breaks outside of that 4-hour consolidation and starts a new uptrend, we might gonna see a further push to the upside. And this can happen with all the majors against the US dollar. Those they have the US dollar as a quote currency can push to the upside, and those they have the US dollar as the base currency can push to the downside, like the USD Swiss, USD Japanese yen, and USD Canadian dollar. Last event for the day will be the European Central Bank's press conference, of course, because of the interest rates report earlier on. And at this stage, it will be interesting to hear how the economist in Europe sees the European economy for the next few months. Friday, during the London trading session in the UK, they will report the gross domestic product. The expectation is to weaken the sterling if the price follows through this drop. Last event will be the prelim consumer sentiment and inflation expectations. If the number remains above 50, it can positively impact the US dollar. We won't expect to see any trend development during this report because it's not among the events they bring that drastic changes in the market.
That's your roadmap for the week. I hope it helps you to stay focused and ahead of the curve. If you found this useful, drop a like, subscribe, and feel free to share it with another trader who needs it. And remember, it's not about predicting, it's only about preparing. See you in the next one.